Thank you, everyone, for the opportunity to speak to you today. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. Just a brief summary of my bio. I've been a professional trader for 20 plus years. I'm considered by even the strongest of my peers to be a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software that's been around for years and is still as successful today as it's been since day one. I founded GPA Trading Services about 7 years ago in 2010. I've educated thousands of students over the past 10 plus years. I've conducted live events, speaking engagements, platinum program. We have one-on-one coaching, mentorships. I've been there and done it all. This is our website, GPA Trading Services. If you haven't had a chance to peruse our website, we welcome you to do so. This is me in front of my trading station. I trade every day. Today's topic is supercharge your trading results by anticipating future market conditions. We believe we have the best software on the market for several reasons, and I'm going to review that in just a moment. But we have the typical disclaimers. Everyone's familiar with these disclaimers. But I would like to call your attention to a couple of things. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose and that fits in within their overall financial plan as developed by a financial planner. We recommend you never risk more than 2% of your entire account balance on any one given trade. For options traders, you should never risk more than 5% of your entire account balance on any one given options trade. Always adhere to strict, proper money management. All information provided in this educational service is for your purposes only and should not be taken as investment advice nor a recommendation or endorsement to buy and sell any specific investment. Trade at your own risk. Now, key components in anticipating future market conditions: support and resistance, trend direction. This is the key one, of utilizing multiple time frames. The key to successful trading in any system is dealing with multiple time frames. And the key to that, of trading with multiple time frames, is to align those time frames in a buy mode before you buy and align it in a sell mode before you sell. And we're going to go and teach you understanding how the lower time frames cycle within the larger time frame, as we like to refer as our line of progression. Now, the key was to align the time frames. We have this unique software we've been having for many, many, many years. And it is unique because it takes into consideration all time frames before it initiates a move. You'll notice here, this is looking at oil. And this is showing that we have oil topping and reversing on a monthly. You can tell it's a monthly because of the MN right there, and a weekly and a daily time frame. Notice the weekly and the daily are all lining in overbought territory. They're aligning above the red line by design so that we know we're going to be shorting this move. And you notice how price always stair steps. It never moves in one direction. It always stair steps its way down. Yes, on some of the higher time frames, it looks like oil just plummeted, which it did for a lot of money here, plummeted way up here in the 100 range, all the way down to the $60 range, and just looks like it went straight down. But as you start to go to the lower time frame, you can see you have weeks of upside pressure. On a daily, you get multiple days of upside pressure in that same move. So the key was, we knew that in order to be successful to trade, you needed to have your time frames aligned. Well, we developed the software and we married two of our components, the trend momentum and the price action indicator. Those two are a match made in heaven. As I mentioned, once you align the time frames, you need to follow the line of progression because those time frames are going to cycle. In this example, oil was topping and rolling, and we expected the long preceded down move. And notice, when the time frames line going down, price moves lower. When the time frames start to go up, they rally. Then they slingshot lower, rally, lower, rally, lower, rally. And we call this phenomenon slingshotting. That's marrying these two indicators together and having them work side by side. So the way we like to say is you want to sell the rally and the downtrend because the time frames are saying price is going to go lower. And that's exactly what we have here illustrated. The monthly, the weekly were overbought, moving lower. My daily was overbought, moving lower, and we expected it to stair step lower and lower and lower and lower for weeks, if not months. So we decided to take the trade according to the slingshot phenomenon. That's what we mean by following the line of progression. And it continues rinses and repeats over and over and over, and you can continue to sell the rally and the downtrend. Here's a currency. When the time frames align and oversold, price is going to move higher. There's no ifs, no buts, no guesswork. Wouldn't it be helpful if you could step in front of your computer and look at any symbol and say, oh, well, based on the alignment of the time frame, we're expecting an up day or we're expecting a down day, depending on where they align. Here, the pound was starting to bounce after a massive down move, and we could see the time frame was bottoming on the monthly. It started to give us that hook and cross pattern you'll hear me reference. And the daily was also moving and the 4 hour, etc. So how do we know it's going to move higher at this point? Because this hook pattern means the lower time frames are in agreement. We align the time frames such that when they align together, it makes these indicators move. And that anticipates the move in advance. We also have a trigger system for an easy visual aid to help you when the hook and cross pattern develops. So what did, in this case, pound do? It rallied several hundreds of pips, straight up, virtually, and then look at the 4 hour. The 4 hour went from oversold to overbought because the daily turned, the weekly was turning, and then we knew the 4 hour was expected to turn over and slingshot higher and higher and higher, over and over and over, because it was moving in the direction of the daily, which was moving in the direction of the weekly, which was starting to move in the direction of a monthly. So that's what we mean by follow the line of progression. You can see it on any market. The same system works on all markets. There's no need to change your settings. There's no need to do anything. This works equally as effective in all financial markets. Stocks, futures, commodities, ETFs, bonds, anything you want to trade, it works equally as effective. Again, just illustrating the setting up of the time frames as they're aligning. Price went down first, then it did a big reversal. Why? Because the monthly was starting to turn and the weekly was starting to turn. So we knew it would go down first, then reverse and go much higher based on the alignment of those time frames. Very simple. Well, we decided to say, well, the only way we can know whether something is aligned is to look at all the different charts. Right, is to find a chart and when they're aligned, and then you can just look at multiple time frames and go. Well, we went one step further. This software is evolving. It ties in these two indicators, and it also allows you to know when the time frames are aligned. That's where these hook and cross patterns come in. And the two unique components are not only the hook and cross pattern, but the slingshot phenomenon. How do we know something is going to slingshot lower and lower? And how do we know it's going to start to slingshot higher and higher? It's following the direction of the higher time frames. This is a trade. Many of you have seen me speak before. We introduced this trade months back, and we knew that it was going to climb to thousands of pips. It's already up at 2,147 pips. It's got thousands more to go. How do I know that? I'm following the direction of the monthly. Now my weekly is expected to do what the monthly's telling it to do. It should go from oversold to overbought, then start, instead of slingshotting lower, it's going to start slingshotting higher because it's in the direction of the monthly. So notice what the weekly has done. We entered this trade months ago, and I told everyone, you need to get in. It's going to go up thousands of pips. Well, here it is. And you need to get in now because it's going to go up thousands more pips. How do I know? You just need to wait for the time frames to align. So we bought this back when it was starting to bottom and reverse and use the hook and cross pattern. Well, that hook and cross pattern means a lot of information. It means that when a weekly starts to turn up, Just by simply going from down to up, it means the daily is in alignment. It means the 4-hour is in alignment. So as this process was still in the bottoming process, beginning to turn, we knew to go long based on a daily PAI hook. We'll turn the auto scroll off and go back in time. We knew we should go long because the daily was bottoming and the weekly was oversold, ready to retrace. And we got in and then started this scenario of buying the dips. The daily should do what? Go to overbought, then slingshot higher and higher and higher and higher and higher and higher, and continue this process for months. Why? Because not only was the daily turning, the weekly was turning, and we even had a monthly at that point that was also turning. And the process of engaging and disengaging right there. So, mark my words, this is going to continue to go higher. So what was the uniqueness of this software was to design it to where we could align the time frames automatically. So you wouldn't have to go and look at a monthly and say, okay, trend momentum and PAI are up, weekly trend momentum PAI are up, daily trend momentum and PAI are up, or for scalpers, the 1, the 5, the 15, the 30, the 1 hour, the 4 hour, all time frames work the same. When I get a monthly hook, as it was aiming down and turned back up, it means the weekly is beginning to turn, right? Means the weekly is beginning to turn. Well, a weekly beginning to turn means the daily is not only going to turn, it's going to move from oversold all the way to overbought. So ladies and gentlemen, that told me I was going to have days of upside pressure. Days, not just weeks, in this case hours, but days of upside pressure. And the daily started its descent, hook and cross. And yes, if it engages down, it should fail to make a new low. And when it does, you jump in. These are new entry cycles. But it tells me my weekly was turning, my daily was set, my 4 hour was set. Everybody was set for price to move higher. And that's exactly what we're seeing in this trade. We did this live and in class. So if you were in the class and participated with one standard lot, you would be up over $20,000 on one standard lot trade. Well, what if you're not? Well, you trade a mini lot or a micro lot. You're still up thousands of dollars to hundreds of dollars on a simple move by aligning the time frames. Now, again, this works on all time frames, whether you're looking at futures, stocks, commodities, ETFs. We can simplify the templates. We give you in the software multiple template options. So some people might think, well, there's a little too much information on some charts. I just like to see a plain chart. Well, back to the beginning of the basics. Looking at a chart, why does a chart tend to move in stair-stepping affair? Even in the strongest of trends, up, it's still going to pull back, rally, pull back, rally, pull back, rally, pull back. And even in the weakest of trends, you're still going to get the lower time frames to cycle from one extreme to the other, giving you entries to buy and sell when the time frames align. So what we like to do in this scenario is say, sure, how would we have known in advance the euro was ready to move a nice big move to the upside? Well, it's pretty simple when I put this chart right next to it to the same euro dollar. It was pretty simple because back then, the weekly was oversold, starting to turn back up, right? Way over here, the euro was bottoming and reversing. And I told our students, we've been in a downtrend for almost 10 years now. If you go to this monthly perspective, this certainly looks like the last multiple months has been an uptrend, right? But in all actuality, it's been in a decline for over 10 years. This goes back to 2008. And ever since then, we've been making lower highs, lower highs, lower highs. And guess what? The euro dollar is in the very early stages of a reversal. It still might go a little higher. It could slingshot up like it did over here a little bit more, but it's getting ready for a reversal. And the euro is going to go from this higher quadrant all the way down to parity and below, thousands of pips, but it's going to take a few years. So those of you that want to trade and make the most pips like we have in these big trades, you need to align the higher time frame. That's how you get 2,000 pip trades. Pound CAD was the same way. We said it was going to go much higher. We're up over 1,300 pips. Yes, we're getting a little pullback, but the pullback is good. We'll be able to buy the next slingshot in the coming days. And in the coming weeks, we're going to expect a little bit of a weekly pullback because it's overbought, but it's going to slingshot higher and higher in the months to come. Why? Because not only is the weekly, yes, it's overbought, but it's still up, but the monthly is very well sticking up, slope, angle, separation. This has money flow right here is the green line. That tells me how much money's flowing into this, in this case, the pound CAD. And we have a built-in momentum in the trend. So that's how we're able to stick with these trends and stay. And you'll notice I'll show results of not just small little 1 and 2 point S&P moves. We'll show 20, 50, 100, 200 point moves because we align the time frame. Well, if you're a scalper and you don't worry about the higher time frame, you use the lower time frame hooks because it means the time frames are aligned. So whether you like an Ichimoku chart, that's one of the templates. Whether you like it plain with basically nothing on it, you still use the hook and cross pattern. As I mentioned, we offer the triggers as well. What if I just wanted to put triggers on here? Notice when you get a hook and a trigger, that's good to go. And at every time, it's going to make pips. It never fails. That doesn't mean you can't have a losing trade, but it's going to go in that direction before it could potentially what? Stair step lower in slingshot. But that's what I tell our students. Once you buy the hook and cross, the only way it's ever going to come back to get you is if it slingshots back against you. And you'll be able to see the software turning, the cycles turning. So why is this so important? Notice as we add the indicators. Well, we knew the 4 hour was expected to, and the daily was expected to start rallying because our weekly was turning up and our monthly is still up. So that's why we expected this to behave this way. And that's why the software can buy the cycles. And I tell our students, as much as I know the euro was going to go higher, you could still counter trend trade it simply by aligning the time frames, like the 4 hour, 1 hour, and 30 minutes, align those time frames and then sell the rally to then buy the dip. So it depends what you're trying to accomplish. Do you want to stay in a trend for thousands of pips? Then you're going to need to allow it to run and to go against you. It's going to move in your favor, against you, with you, against you, with you. And notice this stair-stepping phenomenon. This software is so sensitive to it, and it is continuing to evolve because these hooks are based on the lower time frame. So this software is all-knowing. It looks to the left of the chart, meaning the lower time frame, and figures out where those indicators are, what direction are they headed, in order to dictate what its behavior is going to be. So what we mean by anticipate future market condition, I've been anticipating this move up 1,000 or 1,300 plus pips, and the previous one 2,000 plus, and it will continue to stair step higher. But why is this not the time to get in right now? You should be counter trend trading this because the daily is turning over and my weekly is overbought, getting ready to depressurize a little bit. But that's why this is not the time to buy and go long. You wait for that line of progression. And a weekly that's up and a daily that's turning over tells me I should start buying daily slingshots and daily slingshots, daily slingshots, daily slingshots, daily slingshots, over and over and over. Notice what the S&P has done on a monthly. The S&P on a monthly has just been increasingly slingshotting for years and years and years. Notice, people say oscillating indicators don't work in trending market. When you marry these two together, you're absolutely going to be able to anticipate future market conditions. Well, speaking of the S&P, it's going down. My monthly's turning over. Does that mean this is the big one, Elizabeth, that we're going to have a market crash? Not yet. We're still going to slingshot higher in the coming months and go on to make 3,000 and above on the S&P. How do I know that? Because I'm following the line of progression, and this will slingshot up again. So what does it mean? The daily hook and cross, this is now a monthly. See, MN, monthly hook and cross down. We're definitely going lower. We're going to revisit the low and make a new low. What does that mean the weekly is going to do? It means the weekly is going to move from overbought all the way to oversold. guaranteed. Why? Because we got the hook and cross pattern on the monthly. So even when this was rallying, I thought you said it was going to go down and it started to rally. I told our students, this is going to fail. You're going to end up with a high, a low, a lower high. And as this turns out, it's going to fail and price is going to go back toward the low and make a new low, right? And here we're in the midst of it. So what is the recommendation for the S&P? Sell the rallies in a downtrend for now, and before long, we're going to have a new higher low into a higher high when the weekly cycle finishes this rotation. Well, what if I want to just scalp and make a point or two? You could start to make a point or two on the lower time frames utilizing the same hook and cross pattern. So what is the S&P going to do in the next few minutes? It's going to chop up and down, up, down, sideways to go a little bit higher as my 4 hour starts to turn. My 1 hour starts to reverse and move higher, and it continues to push. So this is going to chop up and down, sideways to higher while we're watching this and continuing on. So again, it doesn't matter what you want to trade, stocks, futures, commodities, ETFs, bonds, it's all the same. Apple is going to go on and break new highs, but it's going to come down and visit the cloud. We like Ichimoku. My weekly turned and hooked. So I told everyone to sell Apple and look for it to go down considerably back toward the previous low. This weekly, if you know anything about Ichimoku, if we close a weekly candle below this purple and gold line, then it opens the door to the cloud, which is sitting there about 154, so another 14 points down, $14. And yes, that's a high probability trade. Why? My daily is depressurizing. That's why we're getting a little bit of a bounce today. But just like I said the previous days, it's going to make a lower high, lower low, lower high, lower low. So I suspect this little bit of a bounce is not going to go on and break new high. This guy right here is going to turn and head back down. Why do I know that? Because the 4 hour is in the process of depressurizing, and it too is slingshotting lower, the behavior you would expect when the higher time frame, like the monthly and some of these other, the weekly just failed and turned back down, it's going to continue to go lower. So the prognosis would be to sell the rallies in a downtrend on Apple. Amgen, whether you're looking at stocks, futures, commodities, ETFs, same rule. It went up, and I love to see when price goes the wrong way. My weekly's down, my daily's turning up. So we expect, based on the weekly behavior, the daily is going to reverse and head back down. That's exactly what the daily did, and for several days it declined. And we talked about shooting for targets that we would come back and revisit the low around that 167, 168 range. And we still got more to go because the monthly is in the process of turning over. So again, you're starting to get the routine of this. All we need is the time frames to align to get your highest probability trades. Well, we've aligned it for you automatically. This system knows when the time frames are aligned via we can use in many instances, trigger system I showed you a moment ago, the hook and cross pattern, and even our automated trade management system allows you to set the trade to buy the dips in an uptrend when you're in an uptrend. So it would buy the slingshots higher and higher. Or you could tell it to sell the rallies in a downtrend, to sell the trigger, then sell slingshot, slingshot, slingshot. But it's up to you what you want to do based on the cycles. All you got to do is know the cycles, and this system has been trained and coded to know its surroundings. Whether you use the hook and cross pattern, you use the hook and cross with the arrows, it doesn't matter how you slice it, it's the same principle. So again, if you want to use the trigger system, we give you the triggers, you get the hook and cross pattern with the trigger, you go short, and notice, even as it went in my favor, I knew it was coming against me because why? It started to turn against me. But it's expected not to go on and make a new high and then go on and make another low because what? The higher time frame is down. Pretty simple, isn't it? So whether you use the trigger system, all right, it works on all time frames. You get these trigger systems to tell you, well, what if I'd have bought the S&P back when it was way down here in the 1700? Man, I'd have made hundreds and hundreds of points. Well, look at what we have now. It's a much larger trigger to the downside. That means it's telling me my monthly, my weekly and my dailies, back when this fired, were in agreement for a downside movement. And it's still in agreement for a downside movement. It's still cycling. So what's the strategy when you have a buy the dip in a rally or sell the trend, the rally in a downtrend? You use the slingshot phenomenon in the coming days to sell the rallies in the downtrend. As this weekly has spoken, it's going to continue to move toward oversold. So my daily will finish this cycle as it's doing. Then it's going to turn up and then slingshot lower. Does that mean it could rally a little bit? Sure it can, but it's still going to slingshot lower and lower, and simply aligning the time frame. Well, here's a couple of huge trades for those of you that trade Forex. The dollar-yen based pairs are in a daily, weekly beginning of a reversal. The monthlies are still down, but the weeklies are oversold, getting ready for a depressurization. And the daily gave us a hook and cross pattern days ago. So that tells me buy the dip in the uptrend on this dollar-yen pair. It is definitely going higher. Even if it turns out it's a lower high and a lower low, eventually, long term, we're still going to end up with a higher low. Even if it comes down here, we're still going to end up with a higher low and a higher high. So notice, yes, the lower time frame cycle within the larger. So I'm not concerned the monthly's down right now. I'm more interested in buying and scalping the weekly up because it's going to make hundreds of pips. And also, when you get a hook and cross pattern, guess what it does? Anybody use Fibonacci's? Use Fibonacci's from swing point highs to swing point lows, and you expect we call the 38 a 50, a 61.8 a sweet spot. Well, notice we have targets, and the last time we were truly overbought, not including multiple slingshot, but the last time we were overbought was way up here. So the dollar yen has the high probability that we're going to continue to climb, not only stair step its way higher, but make a move toward this 38.2, which is sitting up at 107. So that's another 150 pips, 107.97 to get there. Then as 109 and 110 could go up several hundred more pips. Why? The daily's turning and the weekly is oversold. So if my daily keeps going, the weekly is going to turn, as you see, and that's going to give us the same type of trade we have seen with the dollar CAD, making 1,300 plus pips. What was that? It was a weekly that was oversold, starting to turn when a daily was reversing. And the weekly made that full cycle weeks and weeks and weeks and weeks later, as we stated live in class. So again, why is this unique? Because the system works in any time frame. It works on any market. It works on any financial market, and there's no need to adjust anything. If you trade one unit over something else, you got to make adjustments. No, it's here for you. And you can even automate it to do all the trading for you if you don't want to be there in the chart, buying and making your own buy and sells. So again, it's all about aligning the time frames, and this system does it automatically through our unique, what we call a hook and cross pattern, and the slingshot phenomenon. No one else has this. And that's why we're unique, and we've been around for so many years, and we have thousands of students from around the world that state their years of trading career on our success of this software. And we do painstakingly in each live class. I paint the picture of what the software is going to look like. I give you a primary count where it's going to move. And what if it doesn't? What if it did something different? I paint the picture of what that would look like. So you know as it starts to unfold what it's doing, and should I stay long? Definitely stay long on this one. This one is not going to go down 1,380 pips and make a new low. It's going to make a higher low and a higher high, and you'll see this climb to 15, 17, 2,000, 3,000. It's going up thousands of pips in the coming months. But most traders don't have the patience to say, well, that's great. I know it's going to make thousands of pips, but I don't have the time. If it moves 2 pips up, I want to be long. If it moves 2 pips down, I want to be short. Well, you need to drill down to the lower time frame. So watch this hook and cross pattern. It works on everything. When it starts to turn and hook, what does that mean? Well, this is on a monthly. That means my weekly is oversold. It's about to reverse. Notice what it means. The weekly's oversold and it's about to reverse. And when a weekly does it, the daily's going to do it. It also means you're going to get that Fibonacci style retracement. So we knew back on the pound CAD, even as it was pulling back down, early on, I gave targets to everyone. I said, see, the last time we were overbought, we had a swing point high and we got the swing point low. Now that we're minimum going to go up to this sweet spot. But because of the circumstance of the monthly reversing and disengaging, this is going to go much higher than that. But we had hundreds of pip targets early on. And that's why I told everyone, don't stop this running. It's going to keep stair-stepping higher for months and months and months to come. And the weekly will do as expected. It's going to turn over and slingshot, turn over, slingshot, turn over, slingshot. And that will continue for weeks. But now is not the time to go long, hint, hint, hint. It's going to go lower because the time frames are cycling back down. It's that simple. So again, keep an eye on the yen-based pairs. The dollar-yen has a long way to go. The pound-yen has a long way to go. It's already bounced our 500 plus pips, as we said just a week or so ago, that this was going to rally to the sweet spot minimum. The dailies are still up. My weekly is what? Still starting to turn. So if this joins forces, this is going to go way higher. Well, what if it doesn't and this turns back down and we end up with a lower high and a lower low? That's why we said buy the pound yen, take profits as we get into the sweet spot, and once the daily reverses, look to go short again. And if the weekly is going to win that battle, then the daily is going to turn over and slingshot higher and higher. If the weekly is not going to finish and continue higher, then it's going to turn back down and continue to go lower. And that will happen when the daily finishes the cycle and goes back down. So keep buying the dips in the uptrend for as long as the daily trend momentum and PAI are up. And how do we do that? We simply buy 4-hour slingshots, buy 4-hour slingshots, buy 4-hour slingshots. And again, this means when this starts to engage right here, the 4-hour turning back up, it's telling me the 1 hour. Why the 1 hour? Because that's the next lowest time frame. We're talking about a 4-hour slingshot starting to turn and engage up. That means automatically my 1 hour is reversing, my 30 is reversing, and price is pushing higher. How's that for something? Awesome. So, well, what are we offering? This is what we're offering. Well, obviously we need to see some trading results. Here's gold trade that we made over $126 move. Not $5, $10, $15, $126 move. Right there. And notice it was a $25,000 trade simply by buying gold and allowing it to run. And here's the downtrend. Well, it works in both directions, whether we expect gold to go lower or gold to go higher. It's based on aligning the time frames. And when we align the time frames, we had over $150 move down. Wow, that was impressive. There it is, a $30,000 move simply on gold trading a standard contract. Here's one of our students, 8,600 pips by aligning the time frame. He made 8,600. Because the monthlies and weeklies were still involved, he allowed the 8,600 to run to 18,000. Notice it's some of the same pairs, pound odd, pound yen, pound dollar, pound CAD, etc. Why is Greg so successful? And this is showing all the different trades running for the thousands of pips up to 18,000. It's simply aligning the time frames to run. Here's gold again, showing an up move of over $110. Here's a trade for the pound odd. We were trading it down. Now we're trading it up, as you saw. We're over 2,000 pips to the positive side. Well, this is 778 pips to the downside. And the reason we let this trade run, because the monthly and the weekly were still down. So it went from 778 pips. It kept going to 1,274 pips. It kept going to 2,270 pips. It kept going to over 3,000 pips by aligning the time frames and selling slingshot, 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 and allowing it to continue to move, right? And then here's the pound CAD. Again, it was to the short side, 3,000 pips. This is nothing to sneeze at. All you need is one of these trades in a year, and that'll pay for your subscription service and then some. Pound yen, over 3,200 pips. All I'm doing is lining the time frames, letting the hook and cross pattern and my trigger system to lead me to sell it or lead me to buy it. And based on where they are in relation to the cycle, all we're doing is cycling the time frames and trading them accordingly. And based on the direction of the higher time frame, the lower time frame exhibits this slingshot phenomenon. Here's what we call a breakout trade. We're so advanced in the software, you can set a high and a low. The system automatically calculates it for it, like during London session, for example. And you can tell it, okay, if it breaks the high, I want to go long. If it breaks the low, I want to go short. And the system will do it automatically. This was a breakout trade to the downside of 272 pips because the time frames were aligned. Now, what is our master trader program? It includes the software we reviewed, and it includes our live trading class, where we discuss and show all of this information and go through every ounce of measure to teach you exactly how to trade it, when to trade it, why to trade it, what's expected, and what to do if it doesn't do what's expected, to look for the software to reverse directions. And here's our special for today. Our software includes a scanner, right? What is a scanner? Well, remember, we talked about a scanner. And the scanner is when the time frames start aligning, I would like to know it to call my attention to future trades. So here's an assortment of stocks, some currencies, etc., and the time frames are aligning with the 4 hour, 1 hour, and 30. Well, what if I want the monthlies? I'm in for those big trades, Gary. I like those several thousand pip trades you always show. All you got to do is go into the programming, say expert advisor, properties, and instead of looking at a scan time frame of a 4 hour, you just drop down this box and it allows you to set it at a monthly, a weekly, a daily, even for scalpers to go as low as you want to go, down to 15 minutes. So some traders say, well, all I want to do is scalp. I don't care if it's going to move 1,000 pips in a year. I just want to make some pips today. Well, you scale down the lower time frames and align those. And this is the scanner that scans the markets for all time frames based on how I set it. And it tells me when the larger trades are setting up. So we have a lot of stocks giving us some intraday bounces starting to set up. And we're going to see a little bit of a bounce, but the prognosis is based on the time frames, the higher ones, they're still down. So we expect to sell that rally, but we can still scalp it up during these triggers to go higher. So not only do we align the software and we have it based on hooks, crosses, and slingshot, we have scanners that tell you all that information in advance so you never miss the next big move. We have the slice of heaven finder I just showed you. We have the trade triggers we briefly showed. The trade management system you see managing the trade. We have a scalping system for Platinum Asia. And we have a triple P scalping system. It works in stocks, futures, commodities, ETF. It just destroys E-minis by simply scalping a few points up and down. I know many traders that trade E-minis and they say, I die and went to heaven when I make a point or two. Well, when this software aligns, you're going to make a lot more than a point or two. You're going to make 10, 15, 20, 30, 40, even more pips, points in this matter, based on the alignment of the time frames. And this weekly failing and turning out, I told students way up here, it's going to here. Look, it's a couple of weeks later and it's dropped multiple points. It went from the high of 28 and it's right now sitting at 26, almost a 200-point drop, simply by aligning the time frames and expecting the software to do what it's supposed to do. So once I get a trigger and a hook, I'm good to go short. I get a trigger and a hook, I'm good to go long. And if I'm aware of my monthly being up or my monthly being down, I'll know what the weekly is going to act like. Is it going to slingshot higher and higher, or is it going to turn over and start slingshotting lower and lower? The answer is going to be no, it's not going to start slingshotting lower and lower yet. It's going to finish the cycle, but it's going to slingshot lower and lower on the daily as it moves through the next couple of weeks. This daily will turn over and slingshot lower and lower, and price is going to continue to decline. So whether you're looking at the S&P, Dow, NASDAQ, Russell, the Russell is due to come back here. This is over another, looking at this right around 143, that's another 7+ pips, 7 points or so down. That's a huge move. Anybody trade the Russell? It doesn't need to move that much to make these big moves. And why do we think it's going to go? Because we've already turned and hooked out. That means the inevitable movement is for it to go back toward the previous low. Fair enough? So what are we offering? We got all these great systems, and it's based on the same hook and cross pattern, the same slingshots of the common denominator. The 10 reasons why we should do this: it automatically calculates support and resistance, identifies the direction of each time frame trend, it automatically monitors and tracks the cycling time frames, it provides consistent entries, exits, takes profits based on those triggers, slingshots, profit triggers. You can set the trade management system to buy the dips in an uptrend, sell the rallies in a downtrend, or you can just let it manage from start to finish. It fits any style. The dual scanners, you never mix the next big trade. It works on over 800 symbols, so there's something for everyone. And it consistently delivers low risk, high reward, high probability trade. Now here's the kicker. The monthly special normally runs $3.99 a month, and that's a deal. You saw others give a monthly supply to class for $3.99 a month just for their class. Well, this is this unique software and the class for $3.99. But because you're here today, you're not going to spend $3.99. We're going to let you get it for $2.97. Would you go ahead and post the link for us? And the link is www.gpatrading.com, a member sign up, monthly $2.97. Well, ladies and gentlemen, we have the best software on the planet, and we have the easiest software to use and understand, and we have the best value overall. So for the first 50 people that sign up for this link, I'm going to give you 60 days access for $2.97. That's both the software for 60 days and the live trading classes for 60 days for a payment of $2.97. Then you'll rebill every 30 days at $2.97. What a bargain. Very simply stated. I want to thank you for attending today's webinar. The market price anticipator software, as we call it, earns its keep every day and empowers you to read and anticipate price in any financial market, on time, in time, all the time. And again, remember, this is not an aberration where you see these trades where you're seeing there are thousands of pips. I am known for making the big trades and getting the time frames aligned on the higher time frame. Well, ladies and gentlemen, you can align the lowest of time frames, you can align the highest, and you too, like my students, have thousands of pip trades constantly running. And as I close, gold is going to move lower first before moving higher, and we're about to get a reversal on gold, so look for it to pull back more as the weeklies are pulling back. Fair enough? So what do? All we need to do is sign up for this link, and again, the first 50 people will receive 60-day access to the classes and trade live classes and the software. So I want to thank you for your time and attention and appreciate inviting me today, Tanya, and you have a great day.